Shopify's latest quarter just dropped, and while the headline numbers look good, there are three critical green lights hiding just beneath the surface that every serious investor needs to see. So we're going to cut through the noise and break down exactly how Shopify is turning AI hype into actual cash, why they're winning over the big enterprise players, and how they're building a real, durable profit machine.
So here's what we're digging into. First, the AI engine is finally firing on all cylinders, and we can actually see it in the revenue. Second, they're not just playing in the enterprise space anymore, they're accelerating their conquest. And third, and maybe most importantly, we'll look at how all this growth is creating a much more stable and profitable company.
All right, let's start with the top line. Shopify pulled in an impressive $2.8 billion for the quarter. Now that number is big, sure, but it's the momentum behind it that really tells the story here.
That $2.8 billion? That represents a 32% jump from the same time last year. In this economic climate, that's not just growth, that's serious acceleration. It tells you demand for their platform isn't just steady, it's actually picking up steam. That is a very powerful signal.
And this growth isn't just happening in a bubble, it's translating into real market power. Shopify now handles over 12% of all e-commerce in the entire United States. Think about that. They're not just a tool for small shops anymore. They are a fundamental piece of the internet's retail plumbing.
Okay, let's get into the first big story of the quarter, AI. I know, it's been a buzzword for years, right? But the data we're seeing now shows Shopify is finally monetizing it in a really significant way.
And their strategy, laid out perfectly here by President Harley Finkelstein, is crystal clear. They aren't just bolting on a few AI features. No, their ambition is to become the foundational layer for AI-powered shopping across the entire internet. That's a huge platform-level bet.
And this isn't just talk. The data is screaming that it's working. We saw an 11-fold, that's 11x, increase in orders that came directly from their AI search and discovery tools. This is one of the clearest data points you can find that draws a straight line from AI to the cash register.
So how are they getting this done? It's all about this ecosystem of tools that actually help merchants. You've got Sidekick, which is basically an AI business partner. You've got the catalog, which feeds all the crucial product data to AI agents. And then the checkout kit, which lets a sale happen right inside a chat. It's the whole shebang.
And just look at the adoption rate. Over 750,000 merchants tried Sidekick for the very first time this quarter alone. That is a staggering number. It proves that these tools aren't just novelties. They are solving real, painful problems for businesses right now.
Okay, so AI is firing. Now let's move on to the second key signal, which is just as important. Shopify's methodical, and I'd say successful, conquest of the high-value enterprise market. This is all about winning bigger, more lucrative clients.
And listen, this isn't just Shopify's own marketing hype. We're talking serious third-party validation here. When you have Gartner, Forrester, and IDC all calling you a leader, that's the kind of stamp of approval that gives huge, risk-averse companies the confidence to sign on the dotted line.
The company's own numbers absolutely back this up. Their B2B gross merchandise volume, which is a great way to measure how they're doing with bigger, more complex businesses, was up an incredible 98% year over year. I mean, that segment is nearly doubling. It's on fire.
And you can see it in the logos they're attracting. Major brands like Skullcandy are moving over. Their director of global digital experience, Jenny Bouchard, hits on the exact reasons why. A fabulous customer experience on a really stable and reliable platform. That's music to the ears of a big enterprise.
So, you've got these two massive growth engines firing away. But for us as investors, the critical question is always the same. How does this actually translate to the bottom line? And that brings us to the third huge signal from this quarter, a dramatic improvement in profitability.
Now, take a look at their free cash flow margin. Hitting 18% this quarter is strong, absolutely. But what's even more important is the consistency you see here. For a company that for years was all about growth at all costs, this shows a fundamental shift in discipline. This is the cash that lets them innovate and grow without taking on debt. It's a sign of a mature company.
And here's the engine behind that cash flow. It's all about operating leverage. Look at this. Operating expenses as a piece of their revenue have dropped from 43% down to 37% in just 2 years. This is exactly what you want to see. It means every new dollar of revenue is more profitable than the last one. The business model is scaling beautifully.
All right, let's put this all together into a clear framework. What does this all mean
for the stock going forward. Let's look at the opportunity versus the risk.
So, the bull case is pretty straightforward. You've got a massive, almost trillion-dollar market that they've only penetrated by about 2%. With powerful growth drivers like AI and enterprise, the runway is just enormous. But the risks are also very real. A slowdown in consumer spending would hit them hard, and competition is getting tougher, especially from giants like Amazon pushing its Buy with Prime button everywhere. That's a direct shot at Shopify's checkout dominance.
And that really brings us to the core question for any investor. We already know Shopify can achieve massive scale. The question has always been about discipline. Can they finally turn all that scale into sustained, predictable value for shareholders? Based on the evidence from this quarter, from the AI monetization to the operating leverage, the company is making a very, very strong case that the answer is yes.